It's time now for On the Radar, when we ask an investing professional what they're looking at in today's markets. We're back again with Lorne Steinberg. He's president at Lorne Steinberg Wealth Management to talk about something that is very much on the minds of investors. That's gold. And the perpetual question for investors is, how do I invest? Do I buy exposure to the metal, or do I buy shares of companies that mine the metal?
Well, you certainly would have done much better getting exposure to the metal by buying the metal versus buying gold miners. And I use the example of the two largest gold miners in the world, which are Newmont Corp and Barrick Gold, Paul. And despite gold being at an all-time high, both of these stocks are basically lower than they were 30 years ago. The reality is, it seems every time these companies make money, the CEO and management, have stock options, so they're aggressively buying back shares when the price is at an all-time high, and then they often have to either issue equity or retrench when the price of gold is down and the shares are down. And so the reality is, these companies have never mind create value for shareholders. Mm-hmm. The share prices have declined over such a long period of time. It just shows you the futile endeavor of trying to buy gold companies and make money.
And this comes despite the fact that chief executives and boards of directors in this space have been saying for some time now, we're different. We're not pursuing growth at any cost. We're only going to pursue a growth that is shareholder friendly.
Correct. And two other things have happened as well. Because of environmental costs, the price of producing an ounce of gold has roughly tripled in the last 25 years to maybe $1,000 an ounce. So that's one issue. The second issue, which we're reading about all over the place, is that all the easy gold in North America has been found. So all of the exploration is taking place in third world countries. There have been all kinds of environmental issues and other ugly situations that have happened that have cost these companies tons of money, and doing business in a lot of those places is not as simple as doing business in a Western country, which has also hurt all of them.
What do you think of acquisitions in this space? Another, in my opinion, a troublesome history. The two companies that you mentioned, Barrick and Newmont, have made innumerable acquisitions over the past 20 or 25 years. And as you correctly point out, the acquisitions appear to have done nothing for shareholders.
They've destroyed shareholder value. And again, I've brought this up in the past with several executives of companies like this, which is the only time they make acquisitions is when the price of gold is at an all-time high and they have a lot of cash flow. Because they never want to sit with cash. So they spend their cash, then they buy assets when the price is high, and then they end up writing it down, when in fact, a rational investor with a long-term focus would be building cash during the good times to be able to spend it and buy things at depressed prices.
Mm-hmm. So it seems pretty clear you do not favor buying gold stocks. What about the metal? Is there more?
I've never owned a gold stock in my life. I do not own gold. It's so much easier, as Warren Buffett would point out, to buy companies whose earnings are growing over time and who also are not dependent on the price of a commodity like gold.
Does that mean you do avoid other commodity-related stocks as well?
We do have some commodity stocks, but it's a small part of our portfolio, and it would be very, company